Hey, what's up, everybody? Hope everyone is having a positive day. Wanted to do a quick video on credit spreads. Uh, what is a credit spread? How can you profit from one? How do you enter a credit spread? What does this cash collateral mean? How much can you profit? How much can you lose? What is it? So this is a great video. This is a great video for beginners. This is a great video for folks who may not have ever done a credit spread before. So we're going to get right into it. But before we do, I want to ask you guys to go ahead and subscribe to the channel to get daily value added videos. And I also want to ask you guys to go ahead and give this video a like. Alright, so what's a credit spread? I'm a visual learner, so I got these notepads here. I use them throughout the day. They really help me out to either remind me or just maybe keep me organized. So anyways, a call credit spread is when you're bearish on the particular stock, right? So you want the stock to go down, or you think the stock is going to go down. And then the put credit spread is when you're bullish, right? So you think the stock is going to go up. You've done your research, you have a catalyst or whatever it may be. You think the stock is going to go up, right? So that's all great. So you can pick the direction of your stock when doing credit spreads. Now you know exactly which to enter when you think which direction the stock is going to go to, right? So that's all great, but the best thing about credit spreads is that time decay, whatever option that you pick, the expiration that you pick, time decay is on your side. So unlike regular calls and puts where time decay is working against you, right? So credit spread is the complete opposite, which is why me particularly, I love them. I do a few every week, after doing my research and whatnot. And so as you can see, I got one open right here. It's for IWM. It's a Russell 2000 ETF, basically small cap ETF. I entered in it last week. As you can see, I'm up 65, a little bit over 65%. So usually what I do, I usually close them out around 80%, maybe 75%. I don't take a risk letting them expire. Maybe they dip after hours, or maybe they, increase after hours based on, if you're doing a call or a put. Anyways, so my target percentage or my target profit is 75 to 80%. All right, and then the cash collateral is how much you're putting up. So we'll see that once we actually walk through it step by step. And also, like I said, I usually want to pick a stock that's going to trade pretty much sideways, right? As you can see, this past week, it was only down 79 cents, right? So, we do have sell-offs. You want to watch out for them, but usually the stock is pretty stable, right? So, first thing you want to do is go ahead and click on trade options. You'll get a list of all the options available. As you can see, IWM currently is at 162.42. So next, what you want to do is select an expiration date. I usually just select 1 week out. Let's say 1 week out, 7 days is October 30th, right? So again, time decay is on our side in credit spreads. So we have 7 days for what? For a call credit spread. Let's do a call credit spread first. We want to first make sure we have this selected to sell a call, because that's what we're going to choose first. So by next week, I'm thinking that this stock is going to stay below 165. Why 165? Because it can go up a little bit more, but I wanted to stay below 165. So you want to make sure you sell a call on that strike price that you choose. So stock can go up and down. It could consolidate. It can even go higher. That's your choice if you want to get out or stay in. But eventually, at expiration, the stock needs to be below 165 in a call credit spread for this call credit spread. And then right after you sold a call, you want to buy a call right above that strike price that you sold. right? So that's a call credit spread, guys. So it's going to say call credit spread right here. If it doesn't say it, then go back and do it right. Do it again, because you do not want to mess this up. All right, so you got a call credit spread. You're about to open it, but you see this total credit right here. So what does that mean? Let's enter 1 in the contract. Enter 0.34. So that 0.34 right there is the amount that's going to be given to you after this opens, right? And then to really get it executed, since there is some, a decent amount of gap right there, you want to go ahead and put maybe 1 or 2 decimal points below just to get it executed. So let's put 0.33, review order. My Wi-Fi is really slow right now, but there we go. All right, so that $33 is going to be credited to you, right? Credit spread. So this collateral, in the beginning of the video, I told you guys I'm going to tell you what that collateral is, right? So that collateral is linked to how you can calculate your maximum loss. So another, positive thing about credit spread that I really like is how much you're going to win, how much you're going to profit, how much you're going to lose, right? So let's talk about our losses first. The max you can lose is that $100, that collateral minus the credit that you're given. So if it expires at 167, right? If stock keeps going up, and let's say it finishes at 167, you're going to lose all your collateral, right? But you're still going to have the $33. So that's how much you're going to lose. The max you can gain is $33. So sounds like a pretty unfair deal, right? You're risking $100 to win $33. But again, look, you're giving yourself room to be wrong. So that's another strategy within credit spreads. All right, so that's a call credit spread right there. So again, you guys can do multiple contracts if you really feel like it, if you really are confident on a particular stock. But yeah, so that's a call credit spread, guys. So let's go back and I'll show you guys a put credit spread. Again, click on trade options. So put credit spread, right? It means that I am bullish. I think the stock is going to keep on skyrocketing. I think it's going to keep on going up, or I think it's going to stay underneath the price that I chose, right? So let's go ahead and select October 30th again. This time we want to make sure we sell. Always initially have this on sell, but this time instead of a call, we're going to do a put. So we're going to sell a put, 162.40 currently, right? 162.42. All right, so I think by next Friday, in 7 days, I think the stock is going to be at least 159, right? So it can be at 160. You'll still win your credit and you'll get your collateral back. All right, so you want to sell a put. We chose 159 strike price, and then you want to go ahead and buy a put underneath it. Got it? Hit continue, and it should say put credit spread, right? So the one that I have open currently, and I'll go back and show you guys, is a put credit spread, right? So sell a put and then buy a put right underneath it, and it should say put credit spread. So just make sure you do this correctly, guys, right? So let's go ahead and enter 1. Let's go ahead and enter 0.13. Review order, right? And then the max loss on this one is going to be $37. And the max profit is going to be 13. So again, credit spread is a great opportunity for those who want to take advantage of time decay. Personally, I do a lot of credit spreads. I think it's good if you really think the market is stable, right? There's not a lot of sell-offs, which it's really hard to predict, like black swans or like sell-offs, or a event that may make the market go go down all of a sudden. So you just want to watch out for those, which is why I suggest, so if we go back to my credit spread that I have open currently, or that you go ahead and take profits, because you do not want to be in a position that, look, it's Friday afternoon and the contract is ready to expire, and look, you're just trying to get close to 100% profits, and it's Friday and there's a huge sell-off, and boom, you lost all your profits, you even lost your collateral, and now you have nothing. So look, I usually just take profits. I'm cool with 70 to 80. But yeah, so this is how you would open credit spread, guys, and this is a strategy I use. I really hope this video helped all of you guys who either didn't know how to open a credit spread, or maybe need some help and some clarity step by step for both call and put credit spread. Really hope this video helped you all. And again, look, if you really think this video could help someone else and you liked it, go ahead and share it with your friends, share it with your family, share it with anyone and everyone who's trying to learn more about the stock market. This is what this channel is all about, just adding value, whether it be career, stock market, investing, current events. Lastly, just let me know your feedback in the comment section below. If you guys are going to do credit spreads, if you're going to use different stocks, if you guys do any other option strategies, or if there's any option strategies or anything regarding investing, stock market, or career, or whatever maybe you guys want me to do a video on, just let me know in the comment section. Other than that, I'll catch you all next time.